Let's talk about trading ranges and channels. So, trading range is basically a move, the area taken up by a move higher or lower. Very simple, right? So, the price moves up from here to here. That is a trading range. This move from here to here. So, from this base to the top here, that is a trading range. Okay, and then for channels, when you hear about channels, a channel is just basically a price action situation where the price seems to be bounded by two trend lines. Okay, one at the top and one at the bottom. Okay, one at the top and one at the bottom, like this. All right, let me adjust this. So channel. Okay, now how do you trade something like this using an ICT perspective? So a trading channel, you're supposed to just look for buys at the top, look for look for sales at the top, look for buys at the bottom. Right, basically, I used to trade setups like this in the past. Okay, so but now, what if the market is ranging like this? How do you trade within this range? How do you trade within this range? Okay, so let's talk about first of all this scenario and next this scenario. So as an ICT trader, um, the most important thing to you is finding out where the market will go or should go and why you should go there. Okay, and then the next thing is to make sure that you are buying low and selling relatively high. Okay, or you are buying close to a buy side liquidity driver or selling close to a sell side liquidity drive. So yeah, basically looking at when price is trading close to a magnet, can call it that, okay, a magnet in price, and then yeah, now trading before that happens, before the price drives there. Okay, so here now, if you are in a trading range, the first thing you have to determine is what is the range, previous range, what is the area of the previous range. So in this case, we have the price moving up gradually. So you can see the area of the previous range is from here to here. Okay, and then you also want to be buying in an area of discount. So you could just easily pull up this fib. Okay, this Fibonacci tool, and this style I usually use. I think it's very common in the trading community. The premium discount equilibrium stuff. So you want to be buying once the price gets below or gets into a discount area. Okay, and in this discount area, you want to be looking at what are the PDRAs that I can be working off of inside this area. Okay, so that's just it. That's just it. So once we get into this discount, you want to be looking at what are the PDRAs that are there that I can be buying at, and also what are the PDRAs that are above price in the premium area that I can sell at. Okay, so in this case here, let me zoom in. Let me zoom in here. Okay, let me zoom in here. So this discount now, you can immediately see this creative void, but personally I would not elect to use that because it has a very large range, and okay, and I would have to kind of like wait through it and wait for price to give us something bullish like this. In fact, I would rather elect to go to a lower time frame, but let's leave that for now. Okay, I would go to a lower time frame, find something else, but let's leave that for now. So in this, what you can take profit at the premium side of it is maybe this high over here, this high over here, there is a fair value gap in here. Okay, that can be somewhere you can take your profits. Then you have several buy stops. This, this, this. Okay, those are profit taking targets. Okay, although I personally will not elect this, but this are good enough. All right. So if you want to trade within that range, let's see if I am looking forward. Okay, so here we have a 15-minute chart, and this range is still too large. So personally, I will not have found a trade within this area because I will not be taking this as a serious area to buy. Okay, so maybe after a break in market structure, I could have engaged with price, right? So let's. I would have loved to test out another range, but no. I'd like us to move on to this type of scenario now. So in this type of scenario, what you do is exactly this, okay, but a little bit modified. So what you do is you pick the previous range in price. So for example, price just move from this point to this point. So you pick that, do your equilibrium discount, however, and if you notice that price is breaking away, let's say at this bottom area now, price hits a support level and then shows signs of trying to run away. So maybe it's it's at that point it shows a break of market structure of some sort. Okay, then what you have to think about is what are the PD arrays in the premium area, the premium arrays that I can sell at. But in this case, you're not going to be looking at price taking out the high. You would not necessarily wait for price taking out the high. You have to buy and sell within this range. You have to take your trade and take profit within this range here. Okay, you're not anticipating price getting out of it or going below it or anything crazy. Okay, you're just looking for simple objectives. Let's say if this range 50 pips, you can say, okay, I'm looking to take out 20 pips or 30 pips or 40 pips. Okay, so you're looking to buy within this range and take a profit within the range as well. All right, so in this case here, you can see, okay, this is a clear uptrend. I can easily look for price to take out the highs, take out the highs, take out the highs. But here, you can't really do the same thing, but you can trade within this range, look for breaks in structure on the lower time frame and say, okay, this break in structure now, it is a sign that the trend is changing for the moment, okay, and it won't necessarily go above the change direction totally, but I can make a trade in this range and take some profit. So I hope this video gave you some insights. I would end it here and see you on the next one. Bye.